How are you guys? So today, students, we shall be starting chapter 7, that is completion and review. And as I told you in the last lecture, that this chapter comprises of contents from various standards on auditing. So which are the standards on auditing? Which are the essays which comprise in this chapter? So there are 6 essays. Essay 560 relating to subsequent events, Essay 570 relating to going concern, Essay 580 relating to written representations, Essay 260 communication with those charged with governance, Essay 265 communicating deficiencies in internal control to those charged with governance and management, and Essay 450 evaluation of misstatements identified during the audit. So we shall be doing all these essays in this chapter. So and we shall be starting with essay 560, that is subsequent events. So students, first thing you have to remember, look, after the auditor has performed substantive procedures, there is some sort of time lag between performance of substantive procedures and date of audit report and issue of audit report, because the auditor has to see whether the impact of subsequent events has been taken into account, whether the going concern assumption followed by the management in preparation of financial statements is appropriate or not, and written representations have to be obtained from the management concerning various matters, and misstatements which were identified during the audit, these have to be evaluated and these have to be communicated to the management, and communication on other significant findings have also to be made to those charged with governance. So this whole thing is called as completion and review. So you have carried out tests of controls, you have earlier performed risk assessment procedures, you have also performed substantive procedures, say including substantive analytical procedures. Now you are in the process of formulating your opinion. So before you formulate your opinion and express it through the medium of audit report, different type of procedures are performed by the auditor, which we broadly call as completion and review. Okay. So essay 560, which we are going to study today, relates to subsequent events. So what are subsequent events, guys? Yes, tell me, what are subsequent events? You have already read about subsequent events in accounting standard 4 in your accountancy classes. Contingencies and events occurring after balance sheet date. Yes. What are subsequent events? Yes, anyone? The meaning of this concept is same as you have read in your accounts classes. Yes, Tejaswin, Pranav, events occurring after the balance sheet date but before the signing of audit report. Okay. So similar to Yes, you are right, Pranav and Tejaswin. Yes, you are also right. So in context of SA 560 students, subsequent events are those events which occur, those events which occur between the date of financial statements and auditor's report, and plus facts which become known to auditor after auditor's report. Now we shall understand the meaning of it. So, so you are familiar with this concept of subsequent events. So in context of SA 560 students, subsequent events means those events which occur between the date of financial statements and auditor's report. Okay. So like say some event um, uh, has occurred, say in the month of May 24, say we are talking about the financial statement as on 31st March 24. Okay. So there is a debtor, there is a trade receivable outstanding in the books of accounts of the company. So there is a information, say in the month of May 24, that say that trade receivable, a particular party has become insolvent, or say he has fled India. So the money is not recoverable. So it is an example of subsequent event. It is an example of subsequent event. Similarly, suppose a fire has broken out between 31st March and date of signing of audit report. It is also an example of subsequent event. But there is a difference between the nature of these two kinds of events. So students, subsequent events, understand that these are of two kinds. These are of two kinds. Yes, Vismita, you are right. Adjusting events and non-adjusting events. So what are adjusting events? Adjusting events are those events which provide evidence regarding regarding conditions that existed as on the date of the balance sheet, as on the date of financial statements, and adjustments or disclosures would be required in respect of such events. Like we talked about the case of a debtor, a trade receivable, which has become insolvent. So that money, that debt is not recoverable. So the management knows now that this debt is not recoverable. So therefore, it should make a provision in the financial statements as on 31st March 24, although he has become insolvent in the month of May 24. Because such type of event provides evidence regarding conditions which existed as at the date of balance sheet. Clear? But what about another example, like say which I had given, that a fire has taken place, say in the month of June 24. the auditor has still not signed the audit report. So would some adjustment in financial statements would be required as on 31st March 24? Say a fire has occurred in the plant in the month of June 24 and substantial amount of stocks were destroyed during this fire. So would financial statements, some adjustment would be made in the financial statements as on 31st March 24? Yes, friends, please answer. Yes, anyone? Yes, non-adjusting event. Yes. No, because there was no evidence. Yes, Tejaswin, you have gone a step further. That's great. Yes, only disclosure required. Only notes may be given. Sahu SK, Tambeshwari. Yes, but Tambeshwari and Tejaswin, you have to think it in a holistic manner. Like, say, substantial inventories have been destroyed. But in the normal course of business, such inventories would definitely be insured from an insurance company, and the company would be entitled to receive insurance claim in respect of inventories destroyed. Clear, students? So always remember that subsequent events are those events which occur between the date of financial statements and auditor's report. That is one part, and such events may be adjusting events or may be non-adjusting events. So for adjusting events, adjustments or disclosure may need to be made in the financial statements because these impact the items of financial statements as on 31st March, as at the end of year. And they may be non-adjusting events, like they do not provide evidence of conditions that existed as on the date of balance sheet, but still they are of such significance that a proper disclosure of such events may be required. Like we are talking in case of talking the case of fire where substantial inventories were destroyed. So although the inventories are insured with the insurance company, and these do not directly affect the items of financial statements as on 31st March, and these do not either provide evidence of the conditions that existed as on the date of balance sheet date, but still, for the sake of disclosure, for the sake of transparency, such disclosure is appropriate, and such events are called as subsequent events. Clear, students? So this fundamental concept should be clear to you. Like we take another example. So tell me whether what should be done in such a case. So we'll take another example. Say a fire has taken place in the premises of a company in year 23-24. Okay. In year 23-24, fire had taken place, say in December 23. So the company has lodged an insurance claim with the insurance company, and as on the balance sheet date, as on 31st March 24, say the insurance claim is not yet settled. say amount of rupees 1 crore is still outstanding in the books of accounts of the company as receivable. Okay. So now further assume that in the month of June 24, before signing of audit report, the claim is settled. The both insurance companies and insured, they agreed to settle the claim, and say insured agrees to accept rupees 75 lakhs with mutual consent instead of rupees 1 crore, because they are in need of money. Okay. So does such event provide evidence of condition that existed as an as on date of financial statements? Yes, Tejaswin, yes, you're right. There is evidence as on date of financial statements. That's correct. Okay. Or say, like after date of financial statements, there is a planning of merger of two companies. Then although it doesn't provide evidence of conditions that existed as on the date of balance sheet date, so but for the sake of disclosure, for the sake of transparency, such event would need to be disclosed in the financial statements. It is a non-adjusting event and it would require disclosure. Okay. Clear, students? So the meaning, one part of the meaning of subsequent events is clear to you. Now, second part. Now, students, you would consider it to be quite strange. So second part is facts which become known to the auditor after auditor's report. These are also in the nature of subsequent events. Say certain facts emerge after the signing of audit reports, and the nature of such facts is that if these facts had become known to the auditor earlier, then he would have amended his report. He would have not given an unmodified opinion. He would have given a modified opinion. So these also fall in the meaning of subsequent events under SA 560. Yes, guys, you understand what I'm trying to say. Say if some fraud or something else which is directly impacting the financial statements, items of financial statements, comes to the knowledge of auditor after signing of audit report, and the nature of facts is such that they are so material in nature that if these facts had become known to the auditor earlier, at the timing of signing of audit report, his opinion would have been something different. He would have it would have caused him to amend the audit report. So these are also called subsequent events. So always remember this second part of definition 2 from examination point of view. Both the parts always keep in mind. So what happens is uh, we remember the first part, but we forget the second part. Both parts are important from examination point of view. So remember this definition of subsequent events very, very clearly, students. Yes. Clear, guys, up till now? Yes, clear, students? Yes, students, drop a mail. Is the concept clear to you? Okay, fine. Yes, that's great, students. So, what is the objective of auditor in accordance with SA 560? What is the objective of auditor in accordance with SA 560? First of all, SA 560 student deals with the auditor's responsibilities relating to subsequent events in an audit of financial statements. So this whole SA 560 deals with the auditor's responsibilities relating to subsequent events in an audit of financial statements. So he has to take care that management has identified all subsequent events, and if these are of adjusting nature, so proper adjustment has been made, or proper disclosure as may be required have been made in the financial statements. So these are his responsibilities. So what are objectives of auditor in accordance with SA 560? Objectives of auditor are to obtain sufficient appropriate audit evidence about whether events occurring between the date of financial statements and date of auditor report, that is subsequent events, first part of the definition of subsequent events, require adjustment or disclosure in the financial statements are appropriately reflected in those financial statements. So if certain adjustments are required, that adjustments have been made, and if some disclosures are also required, that disclosures have been made. That is part of auditor's responsibility in accordance with SA 560. Okay. And second objective of auditor in accordance with SA 560 is to respond appropriately to the facts which become known to the auditor after the audit report, that had they been known to the auditor earlier, it would have caused him to amend the auditor's report. So this relates to the second part of meaning of subsequent events. Clear, students? So again, I am repeating it, that SA 560, it deals with auditor's responsibilities in relation to subsequent events. The name of SA is subsequent events. So auditor's responsibility in relation to subsequent events. So easy to remember. Okay. And what are objectives of auditor in accordance with SA 560? These are again derived from the definition and meaning of subsequent events. So you can directly correlate these objectives to the definition of subsequent events, which we have done just now. So what was the definition of subsequent events? So this is definition of subsequent events. Events occurring between the date of FS and date of auditor's report, and facts that become known to the auditor after the date of auditor's report are known as subsequent events. So two parts. So this first part relates to first objective relates to first part, and second objective relates to second part. Yes. Yes, Tejaswin, you are stating AS4 auditor's report. We can't do adjustment of event. It is out of scope. So, sir, SA 560 will give us the power to do, and how can it can be done? So, how it can be done? This we shall study just now in a few minutes, Tejaswin, when we come to this part. So students, now think from your own logic, apply your own mind, which procedures could an auditor employ, could an auditor perform to see that all subsequent events are identified and their impact is disclosed in financial statements? Which should be the audit procedures? Do not see the modules. Write from your own mind. What should an auditor do? What should be the audit procedures? Yes. Yes, anyone? Yes, Pranav, you are saying inspect the financial statements along with the inquiry. Regarding inquiry is okay. Regarding evidence of subsequent events, okay. Inspection he would be doing. It is not a separate audit procedure. Inquiry, yes. Tejaswin, you are saying sales invoice, purchase invoice checking, but subsequent relay event can relate to any issue. Yes, Manoj Makwana. Yes, you are right. Talk with management regarding such events. Yes, and previous meeting outputs. That's right. Yes, Dilip. Yes, you are right. Review the books of record books on sample basis for the time between financial statements and date of audit report. Yes. Well done, Dilip. Yes. So students, like, I am pretty sure that all of you are writing these procedures from your own logic by applying your own mind. Okay. I am happy that you have written all the procedures from your own mind by applying your own fundas. Now let us see what the SA 560 has to say and what your module has to say. So one gets a feeling of happiness if your answer tallies, isn't it? It happens, students. So these are the procedures. Yes, Ankit Mishra, you are also right. These are the procedures relating to subsequent events, which an auditor should perform. So, do these look similar to what you students have written just now? So, first of all, obtaining an understanding of any procedures management has established to ensure the subsequent events are identified. First of all, you would see what is the system of management. for identification of subsequent events. You would understand their processes, how they identify subsequent events. Because if that process is working, then half of your work is done. Okay. Inquiring of management, that many of you have written. Inquiry of management to see whether any subsequent events have occurred that might affect financial statements, that they could have an impact on financial statements. So inquiry is a very, very important and significant procedure here. Because see, the auditor cannot be expected to know what is happening in an entity on a real time basis. You understand? So it is the management who is running an entity, or the persons who are charged, who are in the active charge of governance of the entity, who would be knowing all the things, what is happening. Okay. So inquiry becomes a sort of powerful, potent procedure, potent tool in the hands of auditor to identify subsequent events. Okay. See, next, this some of you have also written. Yes, probably Dilip has written it. Reading minutes of the meetings of the entity's owners and those charged with governance that have been held after the date of financial statements, and inquiring about matters discussed at any such meetings for which minutes are not yet available. So if some meetings have taken place between the date of financial statements and the date of auditor's report, so then it minutes of such meetings may throw up light on some subsequent events which have taken place during the year and which could have an impact on the financial statements of year under audit. Okay. And this also Dilip has written, reading the entity's latest subsequent interim financial statements. So like financial statements between 1st April and 30th June. Say the audit report has not been issued till the month of July 24, and you are auditing the financial statements for month of for year 23-24. So you can very well have a look at the interim period financial statements. Okay. So again, students, like you can see that what you thought, the same is, most of the points are same which are provided in essay. But since in examination we do not have liberty of time to think over, and we have to complete the paper, therefore we have to remember the things. That is why we have to remember and learn the things. So if we remember the things and learn the things by understanding them, by applying our logic, then there is a greater likelihood that we will not forget such things in the exam. Yes, guys, is that clear? So see, if you know the meaning of subsequent events, if you understand the objectives of auditor in accordance with SA 560, then you can very well make and write the audit procedures in relation to subsequent events. Yes, guys, is that clear? Just drop a mail, students. So such information may also be obtained from accounting records pertaining to period after the date of financial statements, reading entities' latest available budgets. When, as a result of procedures performed, the auditor identifies events that require adjustment or disclosure in FS, the auditor shall determine whether such event is appropriately reflected in financial statements. Fine, students. So now we come to the second part. So second part of the definition of subsequent events was facts which became known to the auditor after the date of auditor's report. Okay. So before we understand this, students, you have to understand three terms. So these three terms are date of audit report, date when audited financial statements are made available to entity, and date financial statements are issued. So these are three different dates, students, which you have to understand, because our second part of meaning of subsequent events and auditor's report is related to it. That is why it is necessary to understand these three terms. So date of audit report, that is very simple, like date when auditor signs the audit report. Say as on 31st March 24, the financial statements of 31st March 24 are signed on 15 July 24. So the date which is put on the audit report. And second is date when audited financial statements are made available to entity. So obviously, when the auditor has signed the audit report, so he has to hand over the audit report plus audited financial statements to the client, to the entity. So it is that date. Suppose these are made available to the entity on 17 July. Second is date financial statements are issued. This date means when financial statements are made available to third parties. Like for example, some regulator, like say companies' balance sheets, financial statements are required to be filed with registrar of companies. Okay. Or these are given to some third parties, say to some bankers. So when these have been issued to anybody, okay, these have been issued by the entity, obviously entity would be doing this, na? Company would be doing this. So if these have been made available to third party, then that becomes the date when financial statements are issued. Say that date is, for example, it may be 1st August 24. So in the intervening period between 17 July and 1st August, these financial statements, audited financial statements, are still lying with the entity. These have not been made available to any third party. So clear, students, the difference between these three dates is clear to you. So we will also see what is written in your module. So meaning of the date the financial statements are issued. Manoj, we are talking about audit. We are talking about audited financial statements. Okay, so do not, we should not confuse it with the interim reporting. So it reflects the date that the auditor's report and audited financial statements are made available to third parties. The date financial statements are issued generally depends upon the regulatory environment of the entity. Okay, like when statements are required to be filed with some regulator or say with income tax authorities. In some circumstances, the date financial statements are issued may be the date that they are filed with the regulatory authorities. Since audited FS cannot be issued without an audited report, the date that the audited financial statements are issued must not only be at or later than the date of auditor's report, but must also be at or later than the date the auditor's report is provided to the entity. So what is the meaning of this? It means that the date the financial statements are issued would be later than these dates. As you can see, the date financial statements are issued, it should be either the same date, it could be the same date 17 July, or it could be later than this. So this date 1st August or say any date, it would be later than both these dates. Either these would be on this date or later than both these dates. Say if the date of audit report is 15 July and date the financial statements are made available to entity is also 15 July. So the date the financial statements are issued, it can't be earlier than 15 July. This is what the module is trying to say. So obviously the date the financial statements are issued would be same as the date of audit report or the date when audited FS are made available to the entity, or it would be later than that. Yes, is this point clear? Yes, students, is this point clear? Okay, fine. So if students, if some facts become known to the auditor after the auditor's report. Now this part, second part of the definition of subsequent events, we shall deal it uh, in two ways. Number one condition is that facts which become known to the auditor after audit report, but before the date financial statements are issued. Okay. So what should an auditor do in such circumstances? Just now think logically, guys. Again, apply your own mind. If some facts which become known to the auditor after the date of audit report, but before financial statements are issued, it means before these are made available to third parties. So these are either lying with the auditor, or these have been provided to the entity. Okay. And facts are of such nature that if these had known to the auditor earlier at the time of signing audit report, it would have caused him to amend his audit report. So what procedures he would apply in such circumstances? What are his responsibilities? Think logically. Think logically. What would be his responsibilities in such case? Yes, so I would be glad, students, if I can get a glimpse of what is going on in your minds. How you can think. Yes, I would be glad to hear from you. Whatever, students, you may write anything right or wrong, but it should be novel coming from your minds. Yes, Bhavna has written something. Tejaswin has also written something. Pranav is also writing that the auditor can amend the audit report. Amend the audit report. Ankit Mishra is also saying. Any other point of view? Yes. Any other point of view, students? Yes. Guys, write 2, 3 lines. It would open up your minds. No, no. Dilip, Dilip, you are now becoming a sort of detective. No, engagement team member is not hiding. We are talking on the basis of facts. Yes. So guys, I can see from your answers, from your responses, that you are thinking on right lines. You are thinking on right track. So that's a good enough sign. That's a good indicator that your mind is traveling on right path, on right direction. So in normal circumstances, students, the auditor, as we know, has no obligation, has no responsibility after he has signed the audit report, except when he becomes aware of a fact, which if he had known earlier, it would have caused him to amend the audit report. Only in such a circumstances, he has got the responsibility. So what he would do in such a case? He would require the entity to amend the financial statements. Okay. And then he would be auditing the amended financial statements, the amendments, and issuing a amended audit report. So that many of you are writing. Okay. And if the management does not amend the financial statements, now there can be possibility that auditor points out something and the management doesn't pay heed to auditors uh, advice, and they do not amend the financial statements, and say the auditor's report has not been issued to the client. It has not been made available to the client. It is still lying in auditor's office. Then auditor can anyway modify his opinion, because he has not given it yet to the client. He has not yet given it to the entity. Okay. But say if he has given it to the entity, then he would ask the client, the entity, to amend the financial statements, and he would be auditing the amendments and issuing a amended report. And students, say if the management doesn't pay heed to this, and the management, say, issues financial statements to the third parties, then he shall take all steps necessary to prevent the reliance of third parties on such an audit report. Clear, students? So all of you have thought in the right direction, students. Okay. So facts which become known to the auditor after uh, after the date financial statements are issued. Now financial statements are issued, have already been issued to third parties. So there is no other option left. He would ask the management to amend the report, to amend the financial statements, would be auditing the amendments and issuing an amended report, and he would, in the amended report, he would also draw this draw the attention of users to this matter by including a separate paragraph under emphasis of matter paragraph or other matter paragraph, students. So these two paragraphs we would be reading in chapter 8, next chapter, audit report. So please do not try to get confused that what these paragraphs are all about. You would be reading about these paragraphs in next chapter. Okay. So there are full topics on what is included in emphasis of matter paragraph, what is included in other matter paragraph. Okay. And he would take all action. He would to see that no reliance is placed on his earlier audit report, and his amended audit report is made available to the third parties. Okay. So this much you have to understand And remember that this um, this responsibility relating to facts which become known to the auditor after auditor's report is equally important as is the case of first responsibility of events occurring between the date of financial statement and date of auditor's report. Yes. Clear, students? So let us take one, two questions, test your understanding questions, which are in your module. Yes. Yes, see question number one, and what would be the answer of it? How would you attempt this question? Do not see the answer. Yes, Kiran Kumarji, if the auditor doesn't become aware of any information, then any facts, then he has no responsibility after the issue of audit report. The point is the information, the facts should come to his knowledge. Yes, see test your understanding one. So first of all, students understand whether, tell me whether you have understood this question, or should I read it for you? CA PK Jacob is conducting audit of a company for year 21-22. The company is engaged in export of ethnic drugs to buyers in Europe. The audit is nearing completion in month of July 22, and then it becomes known to the auditor that one of overseas buyers has made a legal claim against the company on 1st June 22, caused to a customer of one European buyer due to substandard dyes used in the rugs of one lot of order shipped in August 21. The management of company has decided to agree to an out of court settlement of 5 CR to protect its reputation. The financial statements of company are silent on this issue. How the auditor should proceed to deal with the above issue? Now, what is this situation an example of? Yes, Tejaswin, you have given an exhaustive answer. No, Pranav, you okay? Pranav, I will talk to you on what you are writing. Yes. What about others? 5, 6 responses have come. So first of all, tell me, students, whether it is a subsequent event or not. Yes, Malappa, yes, you are right. It is an subsequent event. Then tell me whether it is an adjusting event or non-adjusting event. See, if you read the situation carefully, the audit is being conducted for year 21-22. The audit is still near completion in month of July 22. It means the audit report is not signed till July 22. However, it becomes known to the auditor that one of overseas buyer has made a legal claim against the company on 1st June. So a legal claim was made on 1st June for injury caused to a customer of one European buyer due to substandard dyes used in rugs of one lot of order shipped in August 21. So sales were made in year 21-22. So the claim also pertains to year 21-22. Claims also pertains to sales made in year 21-22. So this is an adjusting event, as many of you have written correctly. Vedant Tiwari, Bhavna, Mahalakshmi. So adjustment should be made in the financial statements, and the auditor should ask the company to make adjustment in the financial statements. And if the company doesn't make adjustment in the financial statements, then the auditor has to see its effect, its impact on his opinion, as Tejaswin has written. And Pranav, what you are stating that auditor has to amend the audit report. See, you have to understand, the audit report has still not been issued. So what is the need of amending the audit report? He has still not given the audit report at first place. Yes, Pranav, is it clear to you? Yes, that's great. No, no, Pranav, this is the kind of mistake students are making in the exams. So it is already written that is why I am always emphasizing that you should read between the lines. You should read the situation carefully by taking a pen and underlining each and every word with full concentration. It is clearly written here that audit is nearing completion in month of July 22. Nearing. It is not yet completed. So it means that audit report has not been issued. One word can change the whole question, the whole dynamics of the question, the way you understand it. Clear, students? And one more thing, guys, although we have not touched upon this concept, which is asked in test your understanding too, but still students, I would like you to try your hand at this question. So I'll show you where it is written. We have still not touched because I thought that we would be reading it later on. Yes, C test your understanding too. So I am already saying that we have still not touched this concept, but still I exhort you to try your hand at this question and just try to write from your own common sense, from your own logic, what else the auditor would do in such a situation. Yes, only two responses have come, Tambeshwari and Tejaswin. What about others? Yes, Kasak, your messages are visible. No, no. Ritika, she has already gone through the interim financial statements. She has already gone through books of accounts after the date of financial statements. Yes. So, students, one concept in auditing is of obtaining written representations from management. Okay, so there is a whole essay 580, which is part of this chapter. So in case of subsequent events also, the auditor obtained written representation from management that they have identified all subsequent events and necessary adjustments or disclosures have been made. So see, I had already told you that it is the management of the entity who is in the know of things, what is happening inside the company. How can an auditor be sure that all effect of all subsequent events has been incorporated in the financial statements? Isn't it sound too difficult for a poor auditor? So therefore, the auditors obtain written representations from management that look, since now go fundamentally to the concept whose responsibility it is to prepare the financial statements, the elementary thing which we had learnt in our first lecture. Whose responsibility is to prepare the financial statements? Yes, management, Ritika, management. And whose responsibility is to ensure reliable financial statements are made? Again, management. So if some subsequent events are left out, um, and they are not adjusted or their impact not disclosed as may be required, then first management is responsible. Auditor comes into the picture later on. He has to perform the audit procedures only. He has no magic wand in his hand to know all the events which are happening in the company or the entity. So therefore, she would obtain written representations from management, as Sanya has correctly written and Sahu, you have also correctly written. Because she can't be expected to know all the subsequent events. And a letter, a confirmation from management in this regard gives her assurance, gives her comfort that all subsequent events have been identified and their impact has been taken into account. Necessary adjustments have been made or disclosures which need to be required have been so made. Okay. So when we were reading these audit procedures, it is also written here, like here, students. That is why I emphasize, students, that you should read every line of your module, every line, every para, at least once. So the auditor shall request management and where appropriate those charged with governance to provide a written representation in accordance with SA 580. Okay. Written representations that all events occurring subsequent to the date of FS and for which applicable financial reporting framework requires adjustment or disclosures have been adjusted or disclosed. So how simple concept, so simple, but yet so ticklish. The only thing is that you need to know this word written representations. Yes, clear, students? Drop a mail, students. Is this issue clear to you? Okay. So with this, students, essay 560 is over. Now we move on to essay 570, which relates to auditor's responsibility in relation to going concern assumption followed by the management in preparation of financial statements. Now, Dilip, you are asking, can CA Chandni go through estimate of cost accounting for following year? She can check any statements, any account books, any sort of records which helps her identify subsequent events. So tell me, students, where you have read uh, the term going concern in accounts? Yes. Where you have read the term going concern in your accountancy classes? Yes. And Pranav is very fast and he has written the meaning of going concern also. Okay. So what it is? Going concern, students, you have read it in Accounting Standard 1. It is fundamental accounting assumption for preparation of financial statements. Going concern. What does this mean? This means that the entity would continue its business in foreseeable future. It has no intention of reducing the level of its operation materially or going into liquidation. So, so we say that entity will continue to work as a going concern. So financial statements, books of accounts are maintained using this fundamental accounting assumption. Now, what is the impact of this assumption on preparation of financial statements? Because we say when we reflect trade receivables on the asset side in the financial statements, or when we reflect trade payables on the liability sides in the financial statements, then it is implicit by virtue of this fundamental accounting assumption that money is going to be realized from trade receivables, and money is to be paid to the trade payables. And similarly, when we reflect inventories in financial statement, it means that these are ultimately going to be sold, and these would be converted into debtors and ultimately into cash. So this is its significance, that it affects preparation of financial statements. If an entity is not a going concern, if it is not expected to continue its operations in foreseeable future, then its financial statements would be prepared on liquidation basis, on what amount could be realized. Say, then debtors would be recorded on realizable value, and trade payables would be reflected on the value which for which payment is to be made. Okay. So this is the importance of this concept of going concern that you have to keep in mind. So this is one of the fundamental accounting assumption. Now students, let us also revise little bit of accountancy along with it. So which are two other fundamental accounting assumption apart from going concern? Which are two other fundamental accounting assumptions apart from going concern? Yes. Only two responses have come, Pranav and Dilip. What about others? Yes, students, drop a mail. No, no, it is not perpetual succession, Apurva Das. Not at all. So, fundamental accounting assumptions as per AS1 are going concern, consistency, and accrual, as many of you have written correctly. Going concern, I have already explained. Consistency means that accounting policies are consistent from one period to another. And accrual means that revenue is recognized when it is earned and costs are recognized when they are incurred, not when money is received or when money is paid. Okay. So these are three fundamental accounting assumptions on the basis of which financial statements are prepared in accordance with Accounting Standard 1. So you have understood the meaning of going concern and its significance and its importance. Have you understood the importance of the concept of going concern? Why it is important that going concern assumption followed by the management in preparation of financial statements is appropriate? Because students, all other things in this essay 570, which we are going to study, are going to flow from this concept. Yes, Ankit, you have also given the correct answer. So guys, do not take it to the heart, because sometimes it is not possible for me to name every student. Yes, Ankit, your answer is right. Accrual and consistency. So this concept is clear to you, students, and why it is important uh, in the context of preparation of financial statements. And a question on auditors' responsibilities in relation to going concern is coming very often, either in the case study or a descriptive question or in MCQs. So somehow they are picking up some issue, some topic from this essay quite often. So students, we shall be taking a short break, and after the break, we shall discuss auditors' responsibilities in relation to uh, going concern assumption followed by the management in preparation of financial statements, um, and see what are what are the audit procedures necessary to be performed by the auditor, and what are the implications of for the auditor's report in different situations when going concern assumption is appropriate, when it is not appropriate. So we will be discussing various scenarios. So after a short break of 10 minutes. Okay. Okay. So we were talking about SA 570 and auditor's responsibilities. So before we proceed further, students, try to answer this. Whose primary responsibility it is to see that financial statements are prepared on a going concern basis? Yes, Tejaswin management, Tambeshwari management. So here also, students, because you are reading in the context of auditing, but sometimes we fundamentally overlook this fact that primary responsibility for ensuring that that going concern assumption followed is proper is that of the management, because it is the management who has the sole and primary responsibility for preparation of financial statements, and in consequence it's reliable preparation. Okay. So following from this, students, tell me which are the factors which can impact management's assessment of the ability of an entity to continue as a going concern. Say if I am in the responsible position as a man in the management, and I have to assess whether my company in whose management I am holding a key position, whether it would be able to continue as a going concern or not. So if I am going to make this analysis, which factors would be considered by me? Which factors would be relevant? Yes, again, think by applying your own mind. Think by applying your own mind. Yes, Tejaswin has written something. On which factors such going concern assumption will be impacted? That is, and Vismita, you are writing if business making profit or not. So I would like to tell you, Vismita, and this point should be clear to all of you students, that making profit is not the sole indicator of correctness or otherwise of a going concern assumption. So there are many companies which are making losses, like there are many startups which are making losses, but all of them are going concerns because they are able to trade, they are able to meet their liabilities. So the fundamental thing is, if you are able to trade, if you are able to meet your liabilities, if you are able to run your business, then you are a going concern. Although you may be making losses for say few years, ultimately you would have to turn into profits. Okay. But it may so happen in the initial years because the business model is such that you have put some investments, and the business would become profitable, say after 4 or 5 years. Yes. Vismita, is the point clear to you? Yes, Vismita, is the point clear to you and clear to all of you guys? Okay. So yes, students, you are thinking on the right track. Many of you are writing that future is uncertain. Okay. So future events are uncertain and they are difficult to predict. So what would happen 5 years down the line? I can't say right now. So we say that the farther the event in the future, its uncertainty, degree of its uncertainty increases. So the degree of uncertainty associated with the outcome of an event or a condition increases significantly the further into the future an event or condition or the outcome occurs. So I am able to make a judgment of the events which are going to happen, say, 1 year down the line. But what would happen 5 years down the line is not known to me. Okay. Like who could have judged that COVID-19 would come and it would impact the business processes so pervasively and there would be total economic shutdown. Okay. Number two. So we are considering factors generally. So these are the factors, general factors, which are relevant to this judgment. General factor not relating to a particular entity, but general factors. So we can say that the farther an event is into future, the more difficult it is to predict or to make some judgment about it. Number two, the size and complexity of the entity and the nature and condition of its business and degree to which it is affected by external factors affect the judgment. So some businesses are very much impacted by their external environments. Their external environment is very volatile, dynamic. Okay, so this is also one of the factors. And any judgment about the future is based upon the information available at the time at which judgment is made. Subsequent events may occur that may be inconsistent with the judgments made at those times. Like some legal changes can be there, some political changes can be there. Okay. So clear guys, these factors are relevant for management's assessment of entities' ability to continue as a going concern. These are the three factors which are discussed in SA 570. And what are the responsibilities of auditor? Auditor's responsibilities in accordance with SA 570 are to obtain number one, sufficient appropriate audit evidence regarding and conclude on the appropriateness of management's use of going concern of accounting in the preparation of financial statements. Okay. So first thing is they have to obtain sufficient appropriate evidence to see, to verify whether the management's use of following of going concern assumption in preparation of financial statements is appropriate or not. So always remember, management is responsible for preparation of financial statements. Management is responsible that going concern assumption followed in preparation of financial statements is appropriate. Number three, auditor has a responsibility to obtain sufficient appropriate audit evidence that the going concern assumption followed by the management in preparation of financial statements is appropriate. Okay. And next is the auditor's responsibility is to see on the basis of audit evidence obtained whether a material uncertainty exists about entity's ability to continue as a going concern. Now, this word is very important, students. Material uncertainty. This is going to come at many places in this essay, in this topic. So you have to write this word as it is in the exams. Material uncertainty. Remember, material uncertainty. You cannot replace this term with any other term. Okay. So remember this term, material uncertainty. So the auditor has to conclude on the basis of evidence obtained that whether there is a material uncertainty, meaning significant uncertainty regarding events or conditions that may cast a significant doubt on the ability of an entity to continue as a going concern. It simply means that whether there exists some events or conditions which causes significant uncertainty that whether whether the entity would continue as a going concern in future or not. Like say the entity is not able to pay to its bankers on due dates. It is not being able to pay to its creditors on time. So it is withholding its payment to creditors. It is delaying the payment to creditors, say for 5-6 months. Although, as per agreement entered into with creditors, the company is required to pay to them, say in 2 months. The credit period is 2 months, but it is paying to them in 6 months. Or say there are shortages of raw materials, essential raw materials, without which the company cannot carry on its operation. Or there is a shortage of skilled manpower, skilled labor. So the company may be engaged in manufacturing some product for which skilled labor is required, but that labor is not available. So these kind of things, these are all examples of events or conditions that may cast a significant doubt upon the entity, on the ability of entity to continue as a going concern. So the auditor has to obtain, has to conclude on the basis of audit evidence that whether a material uncertainty exists, whether there is a material uncertainty regarding such events or conditions which may cast a significant doubt on the entity's ability to continue as a going concern. Friends, these whole line you have to remember as it is. There is no alternative to it. Okay. Clear up till now, students? So from this flow the objectives of auditor in accordance with SA 570. So again, these are again derived from what we have studied in the responsibilities of auditor. So these become framed in a different way. These becomes objective of auditor in accordance with SA 570. Like students, in every essay, you would see there are objectives of auditor in accordance with that essay. Like in SA 560, there were objectives of auditor to obtain sufficient appropriate audit evidence that all subsequent events, that effect of all subsequent events has been adjustment has been made in that respect, or effect has been disclosed, or and it was also objective of auditor to respond to those facts which become known to the auditor after the issue of audit report. So similarly, here in SA 570, we have following objectives of auditor. Number one, it is to obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management's use of going basis concern of accounting in preparation of financial statements. So first thing is that his objective is to see whether the going concern basis of accounting followed by management in preparation of financial statement is proper or not. Okay. Second objective is to conclude on the audit of evidence obtained whether a material uncertainty exists related to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern, like the sort of events I had given you example, like inability to pay creditors on due dates, like shortage of raw material supplies, like change in regulatory environment, like some uninsured losses. Okay. And to report in accordance with this essay. And third is reporting objective. That whatever evidence you have obtained in point 1 and point 2, now in accordance with that, you have to make a report in accordance with this standard on auditing. Clear, students? Yes, drop a mail, guys. Yes, drop a mail, guys. Are the points clear to you up till now? Okay. So students, first we will see the example of events or conditions, and this table itself is very important from examination point of view. Here in this table, examples are given of events that individually or collectively may cast a significant doubt on the entity's ability to continue as a going concern. Okay. So it summarizes such events under 3 heads. One such head is financial events. or conditions. It is taken from essay 570 students. It is there in the text of essay 570. So one is financial events or conditions, another is operating events or conditions, and third is other events or conditions. So you have to remember all these factors, okay, and also remember under which headings these fall. Many times questions have come from this table, sometimes descriptive uh, questions also, sometimes in MCQs also, like financial events or conditions, like adverse key financial ratios, like certain major financial ratios are adverse, like say current ratio is poor, okay, other ratios are poor. So key financial ratios, key financial indicators are adverse. Fixed term borrowings approaching maturity without realistic prospects of renewal or repayment. Like company had made some fixed term borrowings which were required to be repaid on due dates, but there is no realistic prospect how the company would pay in respect of such borrowings. Indications of withdrawal of financial support by creditors, like this we have discussed. Negative operating cash flows. Negative operating cash flows. It means that operating cash flows are negative. So by its operation, the company is incurring losses. Inability to pay creditors on due dates. So these are all financial indicators. Discontinuance of dividends. The company, as earlier it was paying dividends, now it is not paying dividends. Inability to comply with the terms of loan agreements. So it is not complying with the terms of loan agreements which were entered with the financial institutions or bankers. Operating events like loss of major markets, like some of you have written earlier. Labor difficulties, shortage of important supplies, loss of key management persons without replacement, or management intentions to liquidate the entity or to cease operation, where management has made it clear that we are going to shut down our shop, we are going to shut down our business. So these are all examples of operating events or conditions. Emergence of a highly successful competitor. So again, very common sense points. Other events means like which do not fall in any of these categories. Meaning that these are neither financial events or conditions, and these are neither operating events or conditions. Okay. Tambeshwari, you are saying what is the meaning of realistic prospects? Realistic prospects means um, realistic plans. So how the company would pay, how the company would meet its coming liabilities. Okay. So other events or conditions like changes in law or regulation, like pending legal proceedings against the entity. So like there are some pending legal proceedings against the company, and if these turn out to be successful, these are of such magnitude that entire business of company would be shut down, that it would not be able to meet its liabilities on account of these regulatory proceedings. Okay. Uninsured or underinsured catastrophes. Catastrophes means disasters which may occur. Okay. So some disasters like say earthquake, landslides, these the storms, or say like any floods. So these are examples of natural disasters, catastrophes. Okay, or say fire, if you say it is, if the risk is uninsured or underinsured. So if it is uninsured, you are not going to get any money, all your assets would be destroyed. Or underinsured means that these are not insured up to the extent these were required to be insured, so you would get the money only proportionately. So the concept of average insurance, average clause, you have read it in your foundation exam probably, I think. Yes, guys. So example of events or conditions. So these are examples of events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. These are examples. There can be other examples also. There could be some other situations also, but these are the examples which have been specified in this standard on auditing. These are specified in SA 570. Yes, students, is that clear? Drop mail, students, that this point is clear to you. Okay, fine. So SA 570 states that when performing risk assessment procedures in accordance with SA 315, the auditor shall consider whether events or condition exists that may cast significant doubt on the ability of entity to continue as a going concern. So in this regard, the auditor shall ask the management that if it has made some assessment um, in respect of such events, whether the management has identified some events or conditions that may cause significant doubt on the entity's ability to continue as a going concern, and if so, management's plan to address them. Okay. And if such a assessment has not been performed, the auditor shall discuss the matter with management and ask them to explain what is your basis of uh, uh, following going concern basis of accounting in preparation of financial statements, and inquire whether there exists some events or conditions that may cause significant doubt on the ability of the entity to continue as a going concern. Clear, students? And one more point, students, always keep in mind that say if in some entity there are such factors like there are adverse key ratios or something like that, or the creditors or the company is not able to pay creditors on due dates, it doesn't automatically mean that the company is not a going concern. It doesn't automatically mean, because as I had told you in the beginning, an entity is a going concern so long as it is able to trade. So these are only examples of factors which may cast a doubt on the ability of entity to continue as a going concern. It doesn't mean that entity will cease to continue as a going concern. Say if the management can show to you, yes, these are the plans, these are our estimates, this is how we plan to run the company, this is how we plan to execute our operations, and this is how we plan to, say, procure the supplies or to meet the shortfall in labor. Then if you are convinced, then it's fine. Yes, the point is clear to you, students, that mere discovery of these factors doesn't mean that the entity is not a going concern. If such factors exist, then auditor would ask the management to submit a plan how the management wants to address these issues. Okay. So auditor's responsibility lies in evaluating management's assessment. So whatever assessment has been made by the management, the auditor would assess it. The auditor would evaluate it, whether the assessment made by the management is proper or not. But he would not make an assessment himself at the first stage. He can't rectify the lack of analysis by the management. The analysis has to be first made by the management. The auditor's responsibility is to see whether it is proper or not. His responsibility is to assess it, to evaluate it. Okay. Clear, students? Is that clear? Okay. So additional audit procedures when events or conditions are identified. If such events or conditions of the like which we have discussed in the table, like the financial events, operating events, or other events, these have been identified that may cast significant doubt on the entity's ability to continue as a going concern, the auditor shall obtain sufficient appropriate audit evidence to determine whether or not a material uncertainty exists relating to such events by performing additional audit procedures. So say you are auditor of a company, you have found some events or conditions that may cast a significant doubt on the ability of entity to continue as a going concern. Now you have to obtain audit evidence to determine whether a material uncertainty exists, whether a significant uncertainty exists in respect of such factors. Okay, like the situation can go this way or that way. That means that there is a significant uncertainty, that we are not able to decide which way the swing will tilt. Okay. So in case management has not performed an assessment of entity's ability to continue as a going concern, it would request management to make its assessment at the first place. Because, as I have told you, it is the responsibility of the management to make an assessment at the first place. It can't be replaced with an auditor making an assessment. It has to be made by the management. So he would ask the management to make an assessment and evaluate management's plan for future actions in relating to going concern. So like the management may submit a plan which will show say that in coming 12 months our revenue is going to increase, that and management has sufficient uh, basis for making those projections. Like they may have certain orders in hand which would show that that sales would take place in coming period, and realization is also expected to come quickly. So in this way, the entity would be able to meet its liabilities. It would be able to trade. It would be able to continue as a going concern. Okay. And one of the important factors while assessing management's plan, and in cases where there are events or conditions which may cast a significant doubt on entity's ability to continue as a going concern, is preparation of cash flow forecast. Okay. So the management is going to prepare a cash flow forecast to justify its plans. So like from where the money would come in next 12 months, and and how you are going to meet your liabilities in next 12 months. So this would be prepared by the management. Now, what are auditors' responsibility in this regard? Auditor's responsibility in this respect is to see that cash forecast prepared is reliable. It is backed by reliable assumptions. Like the example I have given to you, that management has projected a certain level of sales in coming months. So obviously you would be asking for some documents on the basis of which this sales forecast has been made. Or say the management has estimated in its cash flow forecast that few liabilities are not going to be paid on certain dates because they have renegotiated their terms with the lenders, that these liabilities would now be paid say after 6 months or after 8 months. So we have got this buffer, this cushion with us, during which we shall be able to increase our cash flows. So again, this would have to be backed by evidence. The auditor would ask the basis on which you are making such assumptions. He would be asking for evidence in respect of these assumptions, like for deferment of these liabilities. Yes. Yes, guys, is it clear to you? So students, while doing essay 570, you would have to devote at least 1-2 days to this topic, because it has many points which are to be remembered, which are to be understood, which are to be learned for writing in the exams. Yes, Tambeshwari, you are saying that you have not understood. Then Tambeshwari, you can talk to me when we will unmute. Okay. So these are examples of audit procedures when events or conditions have been identified that may cause significant doubt on the entity's ability to continue as a going concern. One is analyzing and discussing cash flow, profit, and other relevant forecasts with the management. So you would analyze what the cash flow forecast management is prepared and whether the assumptions followed by the management are correct or not. Analyzing the latest interim financial statements. You can also analyze what is the position 3 months down the line before you have signed the audit report. Whether the interim financial position is consistent with what is reflected in cash flow forecast. Clear? Reading minutes of the meetings, inquiry of the entity's legal counsel, like there may be some liabilities, some legal obligations. So the auditor can inquire entity's legal counsel, and he has to obtain evidence that whether management is not hiding some legal obligations in this cash flow forecast, or whether it has made its provision correctly. Okay. Evaluating the entity's plan to deal with unfilled customers' orders. So, like this, confirming the existence, terms, and adequacy of borrowing facilities. Like say the company has made a forecast that we shall be receiving funds to the tune of say rupees 10 CR from X lender. Then what is the basis of that? Whether there is some in principle sanction, whether there is some sanction letter, or whether it is just a purely an assumption. If it is purely an assumption without any basis, then auditor can discard it because it is not backed by some evidence. Clear, students? So these are some examples given here. So you can read this. These are examples of audit procedures when events or conditions have been identified that may cause significant doubt on the entity's ability to continue as a going concern. Okay. So the auditor shall evaluate whether sufficient appropriate audit evidence has been obtained and shall conclude on the appropriateness of management's use of going concern. So on the basis of audit evidence obtained, the auditor would conclude, number one, whether management's use of going concern is appropriate or not, and whether based on the audit evidence, the auditor can say that whether a material uncertainty exists related to events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern. So students, as far as implications of auditor's report are concerned, I would like to give a pause here, and I would like to interact with you at this stage, so that if there are any difficulties in understanding this concept, we can resolve it. If everything is clear, then we can move on to this concept. Otherwise, we will move on to this topic relating to implications for audit report in our next lecture. Okay. So, Ashok ji, please unmute. Yes. Yes, students, you want to ask anything on Zoom, you can ask. Yes, Tambeshwari, probably the point is not clear to you.
Yes, sir. Sir, first, sir, I don't understand significant doubt in this case, sir. Um, मतलब कि सर
आप
मतलब
हिंदी में बात कर सकते हो ताम्बेश्वरी, यू कैन टॉक इन हिंदी।
यस सर। सर मतलब कि शॉर्टेज हो गया रॉ मटेरियल का, लेबर नहीं मिला, तो सर वो
हम्म।
सिग्निफिकेंट डाउट के अंदर कैसे आया सर ऐसा?
नहीं, अगर शॉर्टेज रॉ मटेरियल का है, जिस प्रोडक्ट से कंपनी इंपॉर्टेंट प्रोडक्ट से इंपॉर्टेंट रॉ मटेरियल से अपना प्रोडक्ट बना रही है, अगर उसकी शॉर्टेज है तो कंपनी प्रोडक्ट कैसे बना पाएगी, और प्रोडक्ट नहीं बना पाएगी तो सेल कैसे होगी, और अगर कंपनी ने लोन उठा रखे हैं तो उसकी वो इंस्टॉलमेंट कैसे देगी। तो सिग्निफिकेंट डाउट नहीं हो गया, गोइंग कंसर्न पे इम्पैक्ट नहीं हो गया, बताइए आप।
यस सर, यस सर, यस सर, अब पता चला सर।
पता चल गया ना, और कुछ प्रॉब्लम है तो बताइए।
यस सर, इन दिस केस ऑफ द कहाँ गया, ये सर कैश फ्लो फोरकास्ट के संबंध सर।
हम्म।
Uh, in this case, sir, future outcomes of the events and condition ये वाला नहीं समझ आया था सर।
फ्यूचर आउटकम ऑफ इवेंट्स और कंडीशंस। देखिए
यस सर।
कैच तांबेश्वरी, सपोज आपने कोई इवेंट्स हैं, जैसे आपने बताया शॉर्टेज ऑफ रॉ मटेरियल सप्लाईज, या कंपनी डिफिकल्टी में है, उसको डिफिकल्टी है, टाइम से पेमेंट नहीं कर पाती, मोटी सी बात ये समझिए आप। ठीक है, तो आप मैनेजमेंट से बताओगे कि आप अपनी प्लान बताओ कि आप इस सिचुएशन को कैसे डील करोगे। तो मैनेजमेंट क्या देगी आपको बना के, कैश फ्लो फोरकास्ट, कि हम ऐसे है, ये हमारी प्लान है, इन जगह से हमारे पास फंड्स आएंगे, और हम ऐसे अपनी लाइबिलिटीज मीट आउट करेंगे। तो आपकी एज एन ऑडिटर आपकी रिस्पॉन्सिबिलिटीज है, क्या जो मैनेजमेंट ने कैश फ्लो फोरकास्ट बना के दी है, आप उसको एज इट इज एक्सेप्ट कर लोगे? पहले तो ये बताइए आप मेरे को।
नहीं करेंगे सर हम
नहीं
उसको।
करेंगे ना?
यस
आप
सर।
क्या क्या चेक करोगे, उसमें क्या वेरीफाई करोगे?
सर हम उसके अंदर वेरीफाई करेंगे कि सर वो मतलब कि वो सही ढंग वो फ्यूचर के अंदर होगा कि नहीं होगा उसके
वो
ऊपर।
कैसे पता चलेगा?
सर हम मतलब कि जो फोरकास्टिंग दे रहे हैं हम उसकी इंक्वायरी करेंगे, इंस्पेक्शंस करेंगे।
हम उसकी एजम्पशंस देखेंगे कि जो फोरकास्ट बनाने के लिए मैनेजमेंट ने एजम्पशन लिए हैं, वो प्रॉपर है या नहीं है, उसके बारे में हम एविडेंस ऑब्टेन करेंगे। जैसे कंपनी कह रही, जैसे मैंने आपको सेल्स का ऑर्डर एग्जांपल दिया, कंपनी कह रही है कि अगले 6 मंथ्स में हमारी इतनी सेल्स होगी, तो हम कहेंगे कि आपका बेसिस क्या है इस सेल्स का, क्या आपके पास कस्टमर के ऑर्डर हैं, क्या बेसिस है आपका, पीछे सेल नहीं हुई थी तो अब क्यों हो रही है। तो इन सब चीजों की हम इंक्वायरी करेंगे।
यस सर।
समझ आ गई?
थैंक यू सर। यस सर,
यस।
अभी सब समझ आ गया सर। थैंक यू सर।
ठीक है, ठीक है। यस, एनीबॉडी एल्स? Oh no, Sanya, there is no conflict. Sanya, you are saying in previous topic we have learned that new audit procedure and conclusions are made by auditor. No, no, it is you what you are saying is not clear at the first stage, Sanya. You can talk on Zoom if you are not able to frame it properly. Yes, Sanya, you can talk on Zoom if you are finding it difficult to frame it properly.
Good evening, sir.
Yes, Sanya, yes.
Sir, as in previous chapter, we have learned that no changes should be made in audited file within 60 days. It can be made. But
Yes,
sir,
it is when the audit has been completed. Yes.
But sir, in this chapter we learned that subsequent events takes place and we need to carry audit procedures to address them.
Yes.
So sir,
You
is
you
this?
are you are talking about the facts which become known to the auditor
Yes, sir.
after the date of audit report. Then obviously he would be issuing a amended audit report, and audit documentation would requirements would apply to the amended report. Isn't your query resolved quickly? See, the auditor has issued the audit report, Sanya, and now and he has prepared documentation, audit documentation in relation to it. Okay. Audit documentation is to be prepared simultaneously as the audit progresses. Clear? So assembly of audit file has to be made within 60 days of the within 60 days of the date of audit report. Now, if some events have come to the notice, some facts have come to the notice of auditor, which require him to amend his report. Had these facts been known to him earlier, then he would be requiring management to amend the financial statements, and he would be issuing a new report. So then he would be obviously preparing documentation in this respect. There is no question of discarding. Yes, Sanya, is it clear?
Yes, sir.
Okay. Yes, Tejaswin, you are saying please tell some example of adverse ratio like adverse key ratio like say current ratio. Say if the a normal healthy current ratio is say 1.33 is to 1. So current assets upon current liabilities. Okay. Or a little bit variation 1.20 is also okay. Say, but if the current ratio is very poor, it means that the company is not having enough cushion of current assets to meet its current liabilities. Yes, yes, Ankit Mishra, it definitely significant doubts about going concern if um there are events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern, then these are required to be disclosed in the financial statements. And there are auditors' responsibilities in this regard as far as reporting is concerned, which we are going to study in the coming topic. So definitely it impacts investors. Yes, any other queries, guys? You want to talk on Zoom? Any other query? No, it depends upon Kiran Kumarji nature of business. So high current ratio may indicate that the company is not deploying its current assets more profitably. Okay, it is related to the profit aspect more, because you are having a high cushion, you are able to meet your current liabilities, but it means that probably you are not deploying your funds for investment in business, in depending upon, of course, on business models. Yes, Kiran Kumarji, is it clear to you? It is not that high current ratio is an adverse thing. it may have these impacts. Yes, depending upon type of business. Yes, any other query, guys? Yes, students, any other query you want to ask on this topic, or otherwise we are going to wind it up? No. So, okay, guys, this is all for today. Have a good time and do open your modules and try to read whatever you have understood, whatever little you have learned today. Okay. Thanks a lot. Have a great time. Yes, over.